All right, good morning, everybody. It is August 4th, 2015. It's about 5 a.m. Central Standard. We've got Kieren in Australia, Jacek in Poland, Gil in Delaware, Ken in Kansas. We may be joined by Joey from Canada and my brother from Michigan, if they can wake up. This is our first.
Yeah, and Bill also said
Yep.
that he would be in too, Ken.
Yep. This is our first monthly call-in. The time clock on the annual coaching will start. Today is the 0 day, so everything up to this point has just been prep. This is the beginning of month 1. What we're gonna Let me set the stage here a little bit. I want to follow the agenda shown there on the screen. Give you each in turn a chance to do a quick introduction and check-in. What you've been up to, get us warmed up. Want you to talk about the goals that you had for this past month and the progress that you have made. If you've got trade statistics, that's when we would show them. If you don't have them now, that's fine. If you have them, let me know where you've got them posted, or I can shift the screen control over to you to show your stats. Then I'm looking for any learning journal insights that you have accumulated, then anything that rises to the level of a golden nugget. Finish up with new goals and focus for the month ahead, and then any questions and answers from the folks in a roundtable format. What I'm looking for in the learning journal insights are things that good lessons learned, observations, experiences, themes, dominant ideas that have occurred this past month, any improvements or adjustments significant that you've made to a system or systems, or decisions you've made about your trading plan. When I talk about golden nugget, what I'm talking about there is something that rises to the level of extraordinary insight for you, something that you anticipate being a core fundamental principle going forward on your trading journey, something that really resonates with you, that feels profound. And that's what I mean by gold nugget. You should be taking those gold nuggets and turning them into a sketch or a flashcard, or something that allows you to stay connected to that. Let me just get a sound check real quick from Joey. Let me unmute him here. Joey, you with us?
Yep.
Okay, good. All right. So what I want to do is start with Kieren. Go in that order. I'm looking for about somewhere around 5 to 8 minutes from each of you to go through your agenda, in order to leave time for questions and answers. Okay. So if there's no question, if there's no questions, let's fire it over to Kieren, and off we go.
Yeah, thanks, Ken. And it's great to catch up with everybody. I know it's been a bit difficult for all of us because of the various time zones, but well done that we've got this happening, and I think it's going to be a great thing going forward. So in terms of goals, my major goal that I've had this month is to take orderly profits. What do I mean by that? It means sticking to the plan, that when I'm at 1.5 R, I'm really looking to lock in 3/4 of an R. At 2 R, I'm looking to lock in 1 R. At 3 R, I'm looking to lock in 2 R, and then to let it run if it turns into a longer term trade. The problem that I've had is greed has set in, and I've allowed the trade to continue way past its use-by date, which has ended up a lot of trades turning into scratch trades, because obviously once it's gone into a profit, I've probably moved it to stop loss at the entry. but I haven't moved it up, and I certainly haven't taken a profit. So I sent Ken a note while I was in Thailand because I was quite annoyed with trades that I'd actually done correctly and watched them while I was on holidays. Yes, I know you're not supposed to do that. Well, that's one of my rules that I broke because it interfered with my holiday, because I just watched these trades continuing on upwards in the direction that I had them, and I got very annoyed about it. Long story short, Ken sent me a number of questions, and I've really thought a lot about it while I was away, and penned a couple of notes. One of the issues, it centres down to basically greed. What happens is I see the trade really shooting off in my direction and I get greedy. I start thinking, hey, this is going to be a 10-bagger. And then that distorts my thinking and it takes me away from the discipline. So I was doing some journaling around all of that. And essentially what I've come down to is that when I take the trades and ratchet up the stops the way in which my plan tells me to do, it turns into a physical feeling. It becomes an actual physical feeling and a mental state, which is very positive. And it's really along the lines of Van Tharp's, what Van Tharp teaches, which is we're not interested in the individual trades, we're interested in the continuum of the trades, and that the individual trade should have very little, if ideally no, emotional impact on us. And so by following the plan and taking those profits and then forgetting about what the asset does after that, I'm not interested. So this has actually now become a core fundamental principle for me, and I characterise it in a Zen way, that it's from chaos to order, and that it's in order that I see a much more manageable trading process. So I'm very happy over the years where I've come to, but this has been the last, or one of the last things, not all of it. I'm nowhere near perfect. I'm not trying to say that, but I'm saying this has been one of the last big things for me. And so my golden nugget is actually that feeling, and I'll take Ken's note on board and try and draw a picture of it. But that's been a big positive thing for me in the last 2 to 3 weeks. Thanks, Ken.
You're welcome, sir. Yeah, this is the question set that I sent Kieren. Let's make sure you guys can see that. Yep. I said, hey, think of the market as a merry-go-round that never stops, and I've identified a low-risk way to get on and off. I think that's especially appropriate for swing trading because we see things going in cycles, and that we found a place to get on and get off. Those are the two tricky points. I used to do that as a kid a lot on those little spinning discs in the kids' playground. And learning how to jump on and off that thing at the right time is crucial. So I asked Kieren to look at this from a number of different angles. First, if you thought about the market as a spinning merry-go-round, what do you think about it? What happens when you chase the merry-go-round and try to jump on or off? Then I'm going to ask him to feel about it. What's the relationship between feeling and acting? Is there some intermediate state in between those two? What is the connecting process between having the impulse from a feeling and the decision to put it into action? What is that state in between the moment where you recognize the feeling and the moment that you decide to go into action? There is some kind of decision that's being made. and I want to know who's doing that. Then after that, I asked them to think about using this model. What happens to those opportunities that we don't take? Whatever is feeling those feelings, and let's call him the chimp. What does he feel like when when he sees that moment to get on pass him by for whatever reason? He's on holiday, he's outside his rule set, doesn't hit reward to risk. Um, how does the chimp take that? And then with our rational mind, what happens to the merry-go-round if we don't get on it? Does it change in any way? Does it remember? Then I want him to think about doing, uh, after we have thought our thoughts and then felt our feelings, what remains? Think of that as like you're in a mental state and you're thinking and feeling and you go through those processes, and then a cold wind comes through and leaves you still and silent. What's left after we have thought our thoughts and they've gone, and we felt our feelings and they're gone? What remains? Who remains? And then what is the next thing to do? So, give me some thoughts about how that exercise worked for you, and some of your comments there.
Is that for me, Ken?
Mm-hmm.
Yeah, okay. So the exercise was incredibly useful because it made me think about the feelings. And, you know, like a lot of traders, we like to think it's all about the system. But I have a lot of unconscious bias, a lot of unconscious beliefs that can pop out when I'm least expecting them. They cause me a lot of trouble if I'm not mindfully aware of what's going on. So for me, the exercise made me think about what is in the present moment. Your question about the merry-go-round. What am I thinking about that? And what came to me was that there's a potential opportunity, then there's action. If the action comes too quickly before the opportunity, the danger for me is that the unconscious bias that Van talks about can come into play. But if I'm disciplined about my process, if I'm doing it in an orderly fashion and pausing before I hit the trigger, I have a better opportunity to get into that intermediate state. And I think Van talks about the zone, or Mark Douglas talks about trading in the zone. So that's what I got out of those questions, Ken. But it took a lot of meditation and a lot of thought, because the systems, there's a million systems out there, but there's only one of me, and I've got to operate. It's got to operate through my mind, and so I need to concentrate on what my thinking is, and that's what I got out of the exercise that you gave me to do.
Yeah, the point I want to iterate here is that you are outside of that that spinning merry-go-round over here at position X. This is Kieren over in here. Pardon me, my mouse is not so good. And the chimp is over here too. And the chimp sees that thing going around and around, and he has an aha moment. He says, oh, I got to get on that thing. Or, oh, this has really been an exceptional ride. And if one is good, more is better. So that chimpanzee is generating these feelings, but it's Kieren that decides to get on or get off, or to take an action, whether that is to stay in the trade or not adjust the stop, or to not take the trade. Whatever action occurs is Kieren's job. There is, and so we have this battle between you thinking and the chimp feeling, but the critical point is this action. There is some space between you and the trade, and it's this moment in here. The moment why. The decision to make an action is coming either from Kieren or the chimp, and your job is to make the action. Your job is to feel the feelings that the chimp generates. Remember, the chimp is this primitive, hypersensitive, very alert, driven by emotions, very sharp senses. His job is to scan the environment to look for moments of opportunity. He's our motive energy. But the rational side that you provide is the one that's responsible for the actions that are taken. So when you find yourself in this tension between feelings and thinking, what you have to do is feel the feelings, acknowledge them, acknowledge the reality. Uh, think about them according to your trading plan, and then integrate that, and then make a decision based on your rule set. And what my observation is that the chimp is going to feel those feelings no matter what. That's his job. You want him to do that because he's the guy that notices things, because he's hyper aware. But you can't let the chimp drive a car. He's too dangerous. So we've got to find a way. We've got to find a way to reward him for feeling those feelings because he's giving us insights about potential opportunities. We've got to reward him for making the feelings, and then we've got to reward him for not driving the car. We got to give him a banana. So my sense is that after you felt the feelings and you've thought the thoughts, there is a momentary pause where you're in the zero state, the moment just before you act. And so don't relinquish the responsibility of the human for making the final decision. So that's just what you've got to do, is act in a way that is proper. And that means acknowledging and respecting the chimp for what he does and rewarding the chimp so that in the future he will continue to observe moments of both fear and greed, because that's the moment when we have an opportunity to make a gain. Because if we feel the feelings, somebody else feels the feelings. But if they're acting on impulses, but we're acting according to our better selves, we should have a moment of advantage, which is good for the team. And the reason that that is important is because the successful performance of our rule set rewards us with money, which can be used in support of our final purpose. And that's a noble purpose and an important purpose. And that's more important than the successful trade, is it enables us to manifest what our mission is, whatever that is. So this is not just an academic exercise. We're trying to do good in the world. Our ability to do good in the world is connected to our ability to act in the proper way after receiving the input from the chimp, after thinking about it like a human. We have a moral obligation to act in the proper way. So let that be the motivation that you need to regain control of the car, and then make a decision about how you're going to get on or get off this merry-go-round. As long as you look at this thing as a merry-go-round, realize it's coming around again. It doesn't remember what we forgot to do. Just because we didn't take a trade doesn't mean it's going to change how it spins. It just keeps spinning and gives opportunities. It's going to come around again. It always has. It has to, as long as there are humans trading the market. So don't worry about it. We'll make more. That's what the chimp doesn't understand. The chimp can only see what he sees. He sees an opportunity at point Z, and he sees that one getting away, and that's all he can think about. He can't imagine a future state in which it comes around again. So that's one of the things we've got to do to calm him down. So you got to find a way to reward that chimp, and then concentrate on that area of action. Feel the feelings, acknowledge them, be grateful, reward the chimp. Think about it, then structure your action plan on the basis of your thoughtful approach. Is this something where, hey, to me, the issue was that you had a winning trade, and rather than exit it, you wanted to stay in the trade, but you didn't take the protective measure to raise the stop to a manageable level that allows you to lock in the trade and not and you end up giving back too much. So that's a technical adjustment that you can make, and that if you have a plan that does that, that satisfies the chimp because the chimp will see that you can manage that. Is that making sense to you?
Well, not only is it making sense, but that's exactly what I've been doing since we had that email discussion, and it's been working really well.
Cool. Okay. That's what I wanted to say about that. It's this relationship between thinking and feeling and action, and this space in the middle between you and the merry-go-round. That is an intentional action. That is a responsible action. The action that you finally take must be informed by your higher purpose in order to give you the strength to deal with that chimpanzee. But then to work with that chimp, you got to find ways to reconcile those feelings and to reward him for feeling those feelings. So that's the main point there. Okay, keep going. Give me so if we call that one a golden nugget, give me just a quick summary maybe of new goals, and then we'll open it up to Q&A.
My new goals are quite simple. To lift my game in the administrative area.
Yeah. Elaborate.
Well, I'm not filling out the form that gives me the graphs that shows the win-loss ratio. I'm just simply going off broker statements to see how I'm going, and that's not good enough. But that's just an area that I have to work on a lot, the admin area. Just totally uninterested in it, but I know it needs to be done.
You know, that's one of the ways that you can help quiet the chimp is you show him that graph and show him that you're on course and that there's evidence and that he's contributing to that. That's really, you really are doing that for the chimp.
Okay.
Because
that makes sense.
Because I think you're at the position where you're comfortable navigating off of the broker statements, and that works except when we get into stormy weather. When you get into stormy weather, the chimp gets nervous, and you telling him to be calm doesn't help him. What he needs to see is the document that says, oh yeah, when I stay calm and I just do my job, we are okay. That's what I think. You got to make that connection. The documentation is not for you, it's for the chimp.
Got it. Thanks.
Okay. Let me open it up to the other three guys. Any questions or comments? Let's see, is my brother's not on. Okay. Questions or comments from the guys? Yasik, Joey, or John, or Gil?
No question from my side.
I guess, I could really relate to the idea of when you're in the trade and the feelings that come up, and just it's just amazing. We talk about systems, and then how much systems contribute to success versus how much how we so much individual, the trader effect, and it really is a very I see a lot of concentration at times on the system, but it so much has to do with the trader.
Yeah,
I see it in myself a lot.
Yeah, it's the whole idea of the trader quality number. It's when you make interventions, what's the net effect compared to the robot? And the trader quality number is simply the results you get from managing your own chimp, the connection between your thinking, your feeling, your chimp, and then the actions you take, that's what's different about you and the robot. The robot are your rules. And so we've got to know what the impact of our decisions are. And that's why, to me, for Kieren's purposes and all our purposes, it's important to document those results so you can see what net effect you are having with the strategy you're using to intervene. So it just comes down to doing it. You have to do that in order to be controlled. Okay. All right. Let's shift over to Jacek. And do you have any documents you need me to look at?
I have one file. I can upload this or send this by email to you if you want.
Okay. If you send it real quick.
Okay. I'm sending this right now.
Same for Gil and Joey. If you have anything you want me to show on the screen, go ahead and send it to me by email now. Or if it's hanging in the base camp, I can pull it up from there.
Okay, I can upload this into the base camp. Just a minute.
What I want us to do on future calls is have a one document yourself ready to show that has those categories and the agenda, so that we can have that prepared and ready to go.
So this is uploaded into the files part in the coaching 02.
Okay.
This is a Word document.
Okay. Okay, off we go.
Okay, last month actually I was not much engaged in trading because I had 2 weeks of holiday with my family, and there were 2 weeks left, which I've mostly focused on preparing all the psychological exercises, and I was mostly focused on that. So this psychological part, it was a great tool for me. I have learned a lot about myself. The most important thing for me it was that I realized I'm a sequential thinker. So this is very important for me. I'm going to revise my psychological evaluation this month. This is one of my goals. The great thing during the last month was zero state visualization exercise, because it let me really feel the different parts I'm during the trading: joy, despair, and I must be focused on to be in now. For me, also a very good exercise was the one that you sent us with the word amazing, and I think we had to change the words to the proper one and behave like a proper professionals, not and we have to take the trading like a business, not like a hobby. After I'm come back from my holiday, I have revised my trading journal, and I have realized that the quality of my journal is low. I need to put there more information, because after a few weeks I'm losing many information. So this is also very important for me to improve the quality of my trading journal and be more focused on the details in the trading journal. The bad thing I did during the last month, I stopped meditating every day, and I'm going to come back to this as my routine, because it let me relax, and it's very important for me. So this is my last month. I have goals for next 3 months, as you can see below. The most important for me is to develop trading craft, and during my vacation, I have sent an email to Ken, and I decided to do 2,000 simulations because I want to improve my trading craft, and I'm going to test myself in all market types, and I want to focus on patterns like P1, Z3PO, and the new idea that I have realized recently in the chat room. This is RLXD pattern. Another goal for me to participate actively in the chat room. Now I have a backlog something like 3 weeks. My goal is also to earn 5 hours per week and improve the quality of the trading journal, because this is the tool that helps to progress in my journey in trading.
Good. I want to highlight just a couple words. I want to connect the ideas of the trading craft to evidence. We will know that you're achieving your goal about developing the trading craft if you're doing the things that professionals do, and that is improving the quality of the trading journal, looking at consistent results, um, uh, regular engagement in the chat room, and this whole idea of focusing on the details of documentation. That's how you know that you're making progress in the professional way. And so what I am drawing here on the left-hand side is this notion of the zero state. In a perfect world, we're right at that origin, the absence of feelings or whatever. What I find my actual best state for trading is one where I'm actually looking forward into the next activity. So it's a little bit to the right of the zero line. So if we look at past, present, and future, I have a slightly forward orientation looking at the next decision to take, or the next sequence of trades, or it's really the combination trades of that 2R battle drill. And then I have a slightly positive emotional bias in which I am eager and energetic, but not crazy. In other words, I'm on point. I have my game face on. So I actually trade better to the extent that I am leaning upwards and to the right. And so my whole goal is to stay above this line right here. I trade poorly if I get down on myself, or I trade poorly if I'm focused too far in the past or too far in the future, if I am neglecting this very important moment that we're in, this central band. So I'm trying to keep my focus in this area here. I draw this inner circle as a zone in which, as long as I'm within that zone, I'm trading profitably. So I don't have to be exactly on my best behavior, but I have to be within the boundaries. And so what I have to have are these checkpoints that tell me when I'm leaving the zone. When am I looking too far forward? That's usually a function of greed, where I'm anticipating some future state and I have not connected it to proper behavior. So I've lost sight of the ball and I'm dreaming. Or if I get too focused on mistakes that I've made or opportunities missed, and I'm thinking about the past, then I'm not mindful to what I'm doing. So I've got to be time-wise in this narrow band where I'm looking at the next, say, 3 or 4 decisions I have to make and monitoring the operation. And then I have this plus or minus zone of feelings that I have to be in. It's not unusual for me to be irritated because of maybe the last decision, so I accept that. I just have to have a checkpoint in here that tells me I'm still in the area where those feelings are not getting in the way of proper performance. So I have to quickly clear those feelings, get back to my optimistic but managed state with the slightly forward-looking bias, and off I go. So I have that as a flashcard for me. About it, it has everything to do with the mental state and state management that I'm in. So I have found that to be really, really important. On a technical basis, just let me tell you, this regression line 10 period crossing the dragon, that is so darn important. I cannot tell you how important that is. And I just want to tell you the story. I have been looking at the regression line crossover framework for almost 10 years. About 4 years ago, I added the dragon to it as a way to refine, and I wasn't sure why, but I just knew that there was something in it. So now I will just tell you, when inside that regression line framework, that the 10 period regression line is the price. All this stuff with the, where the wicks and the tails are, that's noise. The 10 period regression line is the price. And so I want you to realize that the regression line 10 period is looking back 10 periods. The center of the dragon is a 10 period simple moving average. And when you we're essentially putting one standard deviation of width on that moving average. When it gets through that noise barrier, that is a change of state. And when you look at pattern 1, you get some kind of pattern 1 out here where I'm drawing the circle. When that thing goes through the dragon, that's a change in state. Sometimes price will go through and then fall back out, but the regression line didn't penetrate. If the regression line gets up to the dragon and then fails, you're short. If it gets through, you're long. And it's just that simple. Take a look at your charts, and if you're using a 1, 2, 3 entry, or you're using some multiple of the frog box, take a look at where you are entering with respect to the condition of the dragon and that 10 period regression line, and see if you can't get some improvements and refinements in your craft. This is a really important measure. It is very clear on the charts on any time frame, and I would encourage you to study that as you're doing the simulations. I think it's a really important point. I would also say to Gil, a comment I made earlier, to me, visually, it's hard to see on your charts where that dragon is. I really have to scan. It doesn't stand out to me. And my own observation is that I need to have visual cues that I can't miss. There's a reason that stop signs are red. There's a reason that we see bright yellow sports cars. And so I think it's important that you sort out the visual display so that these cues really jump out at you. Okay, so that's everything I wanted to say in terms of comments there. I want to open it up to questions and answers for Jacek, to the rest of the gang.
Thank you, Ken.
Ken?
Yep.
So you said that when the RL10 is crossing the dragon, you said it's a change of state. Is that what you said?
Yes.
Thanks.
Yeah, so this is that dragon, and price came down and then makes that turn and goes through. Well, remember that the price is this zigzaggy thing. The real price, the one that we care about, is the RL10 itself, because that is very smooth. When that smooth regression line goes through the dragon, that's the key moment. What it does at the dragon is crucial. If it fails, then it's more of this. If it gets through, it's looking more like this. So if it gets through and then fails back out, that's your exit. You don't need any more information than the fact that the RL10 came through and then the RL10 penetrated the dragon going the other way. That's enough. You will find that will help you stay in those long grinding moves as well, because the price will vary, but the RL10 will stay smooth and will stay outside of the dragon as it goes up. So that's a way that you can help quiet the chimpanzee. It will help you stay in the good trades longer. Okay?
Okay, thanks.
Okay. Any other questions for Jacek or me? Okay, over to Gil. Do you have a document or anything for me to pull up? Gil, looks like he is offline. He's probably got to sign back in. So let's shift over to Joey. Joe, do you got anything for me to show on the screen?
Yeah, I put it's just to share maybe with some with you.
Okay, I got it.
I put it on the
Got it. I'm downloading
it's
now.
my
Hold a second.
I tweaked it a bit for the goals monitoring. I have my of course I have my trade log that I have the regular R distribution results and stuff like that, and the SQN, but that is something I put together so it's easier for me to follow goals. So maybe it could be good for if it gives ID to other people.
Stand by.
Yeah, so what I did basically is I color coded every box results, and I made a graphic. So the red lines on each graphics are the ideal progression line of where I should be standing.
Mm-hmm.
Uh, so yeah, to me it works. It works good. So I think maybe people would like to see it. Maybe if it's working for them as well.
Okay.
What I found something very interesting on last Friday, because I don't know if you can see, but there's on my on the chart table where there's some color boxes. There's two lines that are gray at the bottom, and then it shifts to orange and yellow. It's because before I was trading just doing lines where I get in and where I get out for my
Yeah.
stops. Now I wanted to, because I want to trade with Interactive Broker because they're very cheap, but I really hate their platform.
Yeah.
So my goal plan was to use the Thinkorswim platform for data and monitoring my trades because the tool sets are better and the platform is working better for me.
Yep.
So now I have started last week to get the hardware, which is I hook up myself with 3 more screens, and I started to trade both platforms. So I did it for 2 days, but the good thing about it, it allows me to really zoom out on my trades. And it's funny because I was talking with Bill about that, zooming out on my trades and at the workshop in June.
Yep.
And then what I really found on was last Friday is that it's like basic. It's just the trend lines. So because I have always hard time with pattern 2, 3, because I see them as a trend,
Yeah.
but I was very often zooming too much close to it and getting out too soon. Now that I zoomed out and I draw the trend line, I use it as a guide. So if I see that it's still on track with the trend, I can stay in. And I did that. I discovered that on Friday, and it worked very good for me with EWZ.
Yep.
So looking forward to try that this week. So by getting in line with my goal of trading with the two platforms, it allows me to solve issue, I think, hopefully for the first sets of gold that I've been monitoring since June. So yeah, that's what I can say.
Okay. Outstanding. So you've been able to connect or solve a screen for decision and a screen for action. Is that fair?
Uh, I'm not sure. I'm not sure I understand, but basically is because my goals are to increase my expectancy, because I was having about 0.15 expectancy, and I'd like it to be between 0.25 and 0.35.
Yeah.
And my daily results, I'm pretty much around 2R, and I'd like to raise that to between 3.5 and 5R a day average.
Yeah.
And trying to do that, I was trying to do that by monitoring my stop and finding how I want to do that. But that was my approach was too much zooming on the candles,
Yeah.
I would say. So now, by trying to switch over with the two platform, I had to zoom out
Yeah.
because I was not able to stay so much zoom in. And that,
Yeah.
by switching to that next step, that is trying to use the two platforms, it allows me to get some insight about how I can look at the thing differently for my initial goal, which is the expectancy, SQN, and average, daily average results.
Yeah. I was calling that on my note sheet here, professional, zooming out on the trade to me is maintaining a professional distance. That's like if you're following somebody on the highway, you need time and space to be able to make routine decisions routinely. So
Yeah.
you have to back off from that semi truck in order to monitor him. So yeah, professional distance.
Yeah, I would say that. And the funny thing is, I think that then from that professional distance, sometime you're able to see that now you need to zoom in. So if I got signals from the outer zoom point of view,
Yeah.
then I can zoom in and just do as I was doing before. So I think it could be work good. I don't have much stat on it, but that makes a lot of sense so far. So
Okay. Sounds good. Looks like the R multiples are coming along pretty well.
well, they were doing very good. If you look at the result column,
Yep.
where is the V? 18. That was a very good day, and I
Yep.
was doing good. But then shift, because when I shift with the two platforms, it changed a lot of things. The
Yep.
way I was preparing my trades is not the same anymore. It cannot be, because before I was doing my position 1R, I was doing a box
Yeah.
just before entering a trade. So now it's going too fast with the two platforms. So what I'm trying to do is I'm trying to get a standard quantity of stock and R for my, let's say for a McDonald's.
Yeah.
So I have a table of my candidate that I really want to follow. So if I want to get in a trade, I know which is going to be my quantity of stocks that I want to buy.
Yeah.
And then I just monitor it from there. I got a default 20-cent stop attached to everything, but then I can move it. I can move it according to my table once the order is in the market.
Cool. Got it. Okay. Summarize your goals going
Ken,
forward
I'm
then.
back.
Okay. Back to Joey. Just give me a final summary of your goals going forward.
Uh, if I understand you'd like to tell me where are my next goals
Yeah,
so far?
for this month ahead, what's your two or three
Well,
things just
because
to
my
focus on?
goals, yeah, my goals are basically much more for 3 months goal, but I would 3 months. So now I'm about 2 months in. So it's for the next month. It's keep going with the expectancy, SQN, and daily average. Our results to improve that. And for as for the two platforms, it's keep going with it. I'm not sure. Maybe like when I feel like it's going well, I would say maybe like 100 trade or something like that.
Yep.
And I'd like to jump and buy one share every time I'm doing a trade, just for R&D purposes.
Okay, got it. Okay, questions, comments for Joey?
Hey, can you hear me, Ken?
Yep, gotcha.
Yeah, hi Joey,
Hello?
it's Kieren. So Joey, did I hear you correctly that you were willing to share that graph that you've made there.
Well, I wanted to share the way I use the standard goal template. Yeah, goal template, because just putting colors like green or red, I felt like it was not exactly what I needed. I wanted to be able to see, because my goals were 3 months goals, so I want to be able to see if I'm on target. So this is why I put some graphics, and then I have these color coded, which I elaborate a bit more.
Okay.
So I thought that, well, to me, I think it was helping more to see if I was on track with them or not. So I said, well, I think maybe this is something that some of you would like to see. If it's resonate with you, then it's something maybe you can try to do.
Oh, it's very visual. I think it's a great idea.
Yeah, the spreadsheet is in the coaching files area if you want to go ahead and
Yep.
use it.
And for your understanding, on the table, you see there's a bottom section which is for graphics. This is where I put together the red line. So I just made a formula and stretch it all across the board, and that just draw the red line. So it basically starts from my initial result and then up to where I want to go, but it's in a linear way. So
Yep. Thank you.
sure.
Okay.
Hey, can you guys hear me now? I got bumped
Yes.
offline and I was
Yep.
struggling to get back on. Can you hear me?
Yes.
Yep.
Okay, great.
Okay. Let me shift over to Gil. Let me get this document uploaded here.
And I would say, Ken, another thing I have to do in the next following days is I have about 1 month of chat room to go through.
Yeah.
I'm late on that one.
Yeah.
Because I feel like there's a lot of good things happen
Yeah.
last month in that
There's
group.
been some amazing work. I will tell you, Jeff and Sunal, Charles. There's been a ton of goodness inside there. Yeah. Okay.
Do you know, Ken, do you know if Bill is still on track with the coaching or is
I don't know. I'm not
okay?
his accountability partner.
Sure.
Who is his accountability partner this month?
It's me, but I don't
Well,
have any feedback from him.
then I got to ask you.
Well, for now, since now I didn't have any feedback for him,
Okay.
so it's okay. It's no big deal. I am pretty busy with just my own task, so
Yeah.
it's not something
Yeah.
that
Right.
is
Remember,
bugging me.
about 85% of this work is you working with your goals on your format. About 10% is the partnering with your accountability partner. About 5% is the get together here where we look at it in a small group. 85% of this is your work. 10% is your accountability partner. 5% is the call. So if we send 100 emails, 85 of them better be on your work and not on uh, administrative details. So here we go. Okay, over to Gil.
Okay. All right. Sorry, I was bumped offline for about 10 or 15 minutes, and I missed the
We have it
latter part
recorded.
of yeah. So anyway, I'm back. So I've been working on a lot of I had my list of short-term and long-term goals. Um, my short-term goals were to start a trade journal, which I have, to learn the frog and the auto framer, which I have, to review a lot of the videos, to participate in the chat room, and to do the psych work. And I've done all those things, and I've been pretty happy with that. But I want to go back to like my trade journal And what I was getting from that is that I kind of have a system that I had in place before Kansas City, and it really targeted the volatility ETFs. And I've been using, what I've learned at Kansas City to make it a more of a system and to develop the system. So my biggest focus has been to try to come up with a logical with your RLCO framework, and so I've been working on that. So my trade journal keeps getting amended as I change my rule set, and I'm really struggling with the fact that I'm seeing too many trades and I'm taking too many trades. I can trade as many as 30 or 35 trades a day, and I think I uploaded a chart, and I sent it to you yesterday in the chat room, Ken, which shows some of my trades, and you can see that there's a lot of trades on there, and I just I struggle with that because I think I need to come up with a higher quality of trade and be more selective. And yet I'm not sure exactly what at this point is going to be working for me. So I go back and forth with that. Anyway, I wrote down a couple things about my trading, and it seems like a lot of times I'll get into a trade, and especially a pattern 5, and it'll go my way if I don't get stopped out, because I keep a pretty tight stop. I usually use a 20-cent position sizing stop, and then I set up my initial stop as a 10-cent stop. And if it goes my way and I'm into it, I'd like to come right to your no lose with dinner for 2 position, and I get there and then I get stopped out. So I get out of the trade a little soon, and then the trade starts to take off again. And my question is, when do I re-enter that trade? And when I do that, I've been taking quick exits with the second red candle, so a lot of times I'll get knocked out of the trade even again. If I decide to get back in, I'll get knocked out. And I don't know whether it's greed that wants me to get back into that trade, or if it's is it a legitimate statistically high probability situation to get back into a trade. You can see the trade yesterday was this was XIV, and it took off. Actually, this was XIV. It took off, and I got into the trade on the breakout, and then I got knocked out when I got to no losing dinner for 2, and I got knocked out on a red candle, and then actually I got back in. I didn't put that,
Are you
that
talking
second
about this
green
one?
candle down.
You're talking about right here?
Yes.
Yeah.
Right.
Yeah,
I got knocked out right away. So
there is no rule set that I know of that I'm teaching that gets you out on that next red candle. When I look at this pattern,
well, I was at no lose with dinner for 2.
okay, well,
Yeah.
here's what's the you're using a generic 20-cent position sizing stop and a 10-cent execution stop. What percentage of a frog box is that for XIV? What's the size of the frog box on XIV?
I have to look that up. Usually it's about it's pretty high. It might be
It's like $1.20. $1.20.
Yeah.
So what a frog box means is that $1.20 is the first time that we can confidently say the difference between signal and noise. And so your execution stop is 8% of a frog box. It's 1/12. And what that means is you are reacting to Brownian motion. You are reacting to noise. And your position sizing 6 times too large, in my view. And what that means is it gives you a very nervous hand on the steering wheel, because at 20 cents, you have a position size that every little tick is you're living and dying on every little tick, and you're not allowing the trend to unfold inside its normal noise channel. Let me draw a picture of what I mean. The trend line right here would look something like this, and the price has some kind of natural oscillation around that. All right. Intraday, that's one of these standard deviations. But you're executing at even less than half of one of those. So you're way, way, way too tight, and your position size is much too large because you are living and dying on every little red candle. So what I want you to see instead is when I put my framework on here, let me show you. Let's see, erase the drawings. Normal. This is what I said in the chat room, and I still go by that. In all of these blue circles, I don't know what the rule set is. I couldn't come up with a robotic decision rule that would tell me what the system is. And so that tells me is that you are using your intuition on all of those, or your rule set is so sophisticated that I cannot reverse engineer it. So let me finish. Let me finish.
Okay, sure.
Let me finish.
All right.
Now, when I put the my framework on and the decision-making rule of the regression line and crossing the dragon, I'm going to highlight what I mean by here. So entering at this moment here in this blue line and that green circle, you have this 10-period regression line has come under the dragon and is now leaving the dragon. At this moment, the slope of the river is slightly up. It's in the upper end of the river. The 10 period has come through the dragon, and now this is either a pattern 5 entry, or you might even front run it a little bit because you're catching it at the edge of the river. And then my stop would be below the Bollinger Band mean. So that's around 48, let's call that 48.13. And the entry is around 48.30. That's about a 20-cent execution stop. So that stop is twice as wide as your execution stop. My position size on this one is off $1.20, not off of 20 cents. So I would be 6 times smaller in position size and twice as wide when it comes to making the execution decision. Remember, a 20-cent adverse move that gets me out of this thing on a $1.20 position sizing stop is minus 0.15 R. So I have no anxiety with giving it the room of the Bollinger Band mean, which is this line. Now that Bollinger Band mean is going to be my stop unless I have something that I think is better. And in this case, I've drawn what I think is better, which is using like the south skin of the dragon on this red line. That's about where my stop would be. So for that stop to be hit, I'm at least 20 or sometimes 30 cents away. So at this moment here, where you're getting out at 80, 48, 85 or 82, my stop is down here around 58. So it's about 30 cents away. So there's room for this thing to run. So what I would say is the way to apply this regression line crossing the dragon to your entries is to position size with the frog instead of 20 cents. So now the individual anxiety that you have is tremendously reduced. That gives you the calmness to be able to use the wider stop. And then I would look at the relationship of the 10-period regression line to the dragon to inform your entries, and that will allow you to, that would have allowed you to stay into this entire trade, entering around 48.30, and at 48.85, you're 55 cents into this thing. At where this price is here is nothing more than a 0.5 R, because you've made almost 60 cents on a $1.20 position size. So there's no anxiety at all. It only feels nervous because you've zoomed in so far that each one of these candles looks like it's really, really important. But if you stand back and look at this in terms of a frog box, that's really not an extraordinary move at all. That's still within the noise as defined by the frog box. So we're just trading inside the noise. Now there's a signal trend developing, but there's no anxiety on this because it's only a 0.5 R win. But I'll tell you this, if you add 0.5 R and 0.5 R and 0.5 R throughout the day, that's going to be a pretty good trading day, and you will reduce your trading quite a bit, and you'll be able to look at more symbols. So that is my advice to you is to use the frog box for position sizing, and then to use use it as twice as wide a stop that you're currently using for execution, and that will give you a lot more comfort when it comes to managing the trades. What I would watch for in you is you like to trade. You love to trade. You love the action. So when you feel the chimpanzee getting nervous, start hitting the drum and note that in your trading journal and see how long you have to hit the drum before you calm down. My sense is that's going to take you 90 seconds to 2 minutes. You should record that in your trading journal to see how long it takes you to reconcile the feelings from your chimpanzee. Now, if during that 90 seconds to 2 minutes a signal occurs where you have to exit, stop drumming and exit. But otherwise, keep drumming until you feel like you're back in a zero state for managing the trade. That's what I would do. So back over to you.
I guess the one question I would follow up with is that the concept of, when I get into a trade, say I took your initial entry, and then to try to get to no losing dinner for two, somewhere in that area, I might have gotten knocked out by the first red candle.
Here's when you should get to no lose plus dinner for two. If you're in that trade at the green line, no lose plus dinner for two is up $100, and I'm going to say probably by this time, where you see the orderly progression of this stop, just let the stop do what it does, and now you're at no lose for dinner for two in on this candle, and that is you're at 48.68 after an entry at 48.28 that's 0.3 of an R. There's no reason you shouldn't be any closer than that. Otherwise, a move of 1/10 of a frog box is kicking you out. So, getting to no lose plus dinner for two, not earlier than 0.3 R.
Right.
Just let the orderly stop tell you when you're at no lose plus dinner for two.
I got you. Yeah, I just one of the things that I was trying to incorporate, and just because of where I was by over trading, is Kim's idea of the bounce reentry, and you can see how the price was sort of bouncing off the river. Actually, it was bouncing off the dragon.
Yeah.
And that was why I was doing what I was doing, but I was late doing it because these were 1 minute candles and things were happening really quickly.
Yeah, that's my point.
So,
That is a routine, easy uh, trend developing in XIV. But
yeah,
that's how far it varies in the middle of a really strong trend. So you have to
right.
be outside of that noise area. So the Bollinger Band mean should be your guide. And all what I've done on this one is I actually accelerated my stop, um, because the Bollinger Band mean is this one.
Yeah,
But I'm using the south skin of the dragon,
right.
and
Well,
that
I guess my
look at the
yeah,
this is how much improvement my stop is compared to the Bollinger Band mean. Every one of those is money in my pocket. That's an improvement over the Bollinger Band mean. But you're exiting on price movement north of the skin of the dragon. You know,
right.
because here's where the dragon is. So you're executing inside noise. You're always going to get chopped out. You'll never get the trend because you're trading well inside the noise. So
Right.
this is the entry where the RL10 has exited the dragon. That's your entry. Let your Bollinger Band mean be your guide. Now that's at 48.10. The entry's at 48.30. That's still only 20 cents. That's point 0.2, actually 0.15 of a frog box. Even that is
Right.
extraordinarily tight. So there's no reason to get any tighter than that. If you're 15% of a frog box and then trying to accelerate the stop, then you're always going to get stopped out. So let the
Yeah.
trade breathe. Use the Bollinger Band mean until it looks like you can comfortably use the south skin of the dragon. And then hit the drum if you feel the urge to get tighter than that. But all of this is
Okay.
predicated on the idea that you're using the frog box for position sizing. That's what gives you the lack of anxiety, because you realize this is 1 minute. These are 1 minute candles. You know, this thing
Right.
can move $3. It can move $4 in a day, but you won't get that if you're getting chopped up in the noise here. So you got to put that stuff in perspective.
Yeah. All right. Well, I just wanted to demonstrate what I've been struggling with. I thought that chart pretty much did it. And thank you. It really does. Yeah. I guess I've got a little confused about, getting to no lose, and
Right.
then I tried to incorporate Kim's bounce system into what I was doing, and
That's two
I think I've
completely
got myself
separate.
a
Yeah.
little twisted up.
Well, yeah. Here's where you are on that.
Yeah.
You are dabbling. You've got a personal system that does not have robotic rules, and you're using some of the elements of Kim's ideas, but not her system. And then the
Yeah.
position sizing compared to the execution stop is uh, much too large position size, way too tight in terms of room to breathe. So we got to clear out all that stuff. Keep it simple. Pattern 1, pattern 5. Look at the regression line crossing the dragon. Use the frog
Yeah.
box for position sizing, and use the Bollinger Band mean, in this case on pattern 5. Bollinger Band mean is your initial execution stop, and then adjust it from there. On pattern 1, I would do the same thing. Instead of a 10-cent execution stop, make it a 20-cent execution stop. Instead of a 20-cent position sizing stop, use $1.20. Use a full frog box. And that's going to vary based on the
Okay.
target that you're using. There's if two instruments have different prices and different volatilities, a generic 20-cent stop doesn't make sense. The size of the position sizing stop only makes sense in reference to the size of its frog box. That's a really important point.
Right.
Okay.
All right.
Okay, back over to you.
All right. So, yeah. Okay. So
This,
I
Yeah, let me interrupt one more time. What I want to see from you in writing, within 24 hours, uh, are the goals. Make it 48 hours. We all have lives. 48 hours to get your goals for this month ahead in writing, and within a week, the system rules that you're going to execute. Take the time to do that. 48 hours for goals, 1 week for the written system rules. And then once you have those rules, track the compliance with those rules. That's what I want to see next month.
Okay.
I want to see what a month.
Talking to me?
Yeah.
Okay.
Yeah, this is your turn.
1 week. Okay, yeah, I missed. I thought you had mentioned Kieren's name. For some reason,
No.
But okay, so goals, I have to have 48 hours and a week, my system rules. Okay.
And then at the next month, I want to see your compliance statistics. That is, track your ability to execute the rules that you just committed to in writing.
Yeah. Yeah. The problem is that my rules are sort of evolving because I'm not.
That's why
I'm
giving you 1 week
Yeah.
to evolve them into a steady state. At the end of 1 week, they are done evolving for the rest of the month. Now, what I want you to do is commit to one rule set in a week,
Yeah.
and then track that for the remainder of the month. Now, if you do other things, you can do those, but the only ones I want to see are your compliance rules, your compliance statistics to the rule set that you lock in. You got 1 week to lock it in. You're going to find that extremely difficult. That's why I'm telling you to do it. Lock in one rule set, and then for that rest of that month, track your compliance with that rule set. If there's other things that you do, go ahead and do them. I'm concerned only with the rule set you commit to in writing, and I want to see what the statistics on compliance are and the results of those trades. And
Got it.
I want you to paper trade them going forward to remove the anxiety.
Right. Okay. Will do.
Okay. I've got 6:30 here. I got to get ready for work, so I'm going to let once more around the horn for any questions and answers for Gil, or any closing comments from anybody that needs to play catch up.
You said, Ken, that this is going to be recorded?
Yes, it is. I will.
You're going to post it in the project?
Yes, I will.
Oh, okay. Okay, and listening to Gil, I sent in the project room. I wrote something about AAA trade, so I posted it. So if anybody wants to see it, I posted it in there.
Okay.
All right. Thank you.
Any closing remarks, Jacek?
No, thank you.
Okay, Kieren?
Only that it's been a great thing, and yeah, I learned a lot from what you were saying there, Gil. It's you're not alone, mate. That's for sure.
Oh, thank you.
Yeah, this is not easy stuff, but it's easy to get too close to the chart. I actually think the phrase we did for Joey, the idea of professional distance, is going to help you. What I've just drawn here is that normal channel of noise. None of the movement inside where I'm drawing these diagonals should get you out of that trade. So we've got to just have the wider stop, and the perspective is that if you zoom out and look at this in terms of a daily chart with the frog box, you'll realize just that this is actually a very orderly move. That's a very orderly move. It only looks nervous because we're so close to it. You're letting every heartbeat make a decision. We can't live that way. Too nervous.
I just had one thing. I know you got to go. I just did the amazing word exercise, I guess it was called.
Yep.
And one of the things that came through to me is that you know, the words that we use are very important. So I've really been trying to concentrate on my use of words. And, you know, that exercise sort of pointed it out that, you know, we use a generic word like amazing, but we could be a lot more detailed in that. And it sort of points out that, you know, when we try to communicate with each other, we miscommunicate more than we communicate because sometimes we use inappropriate words, I guess, you know. So anyway, that exercise meant a lot to me. And, you know, we try to communicate, like you try to communicate with me what your ideas are, and I only understand a portion of that because of my psychological background. I can only grasp so much of it. But the words really help. So I like that exercise.
Yeah, there's a lot of emotional content in the words. You know, every one of those words is connected to every memory, whether we recognize it or not. All of that emotional content gets triggered every time we hear the word. So when I hear a word like amazing, it tells me this was exceptional, extraordinary, unbelievable. Well, when we have a good trade, I don't want to think of that as an amazing event. I want to think of that as routine, boring. Of course it's like that. That's what this system is supposed to do. That helps me maintain my emotional stability. And so that's what that exercise should reveal, is how easily our emotional stance is changed when we substitute different words. So what we say to ourselves in our head, the self-talk, how we describe our behaviors in our trading journal, that really becomes important in terms of personal development. Okay, so I'll get this thing processed and hung on YouTube, and send you the private link to it. Would anybody have any objection to sharing this with the other groups? I think there's some good.
Yeah, I'm fine, Ken.
I think there's some good learning points in there for them
No,
as well.
it's good for me too.
Okay. We'll take that as our standard
Joey?
practice. We'll take that as our standard.
Joey, if you want to join, all right. If you want to join Yasik and I, we talk every other Sunday. You're welcome to join us if you want to participate with us. You know?
Just give me a sign by email, and I'll try to join if possible, of course.
All right. Very
Okay,
good.
guys, then I declare this meeting adjourned, and we'll see you in the chat room. Let's have a good day.
Thanks.
Ken.
Thanks.
Thank you.
Yep, take care, guys.